Good day, learners. Welcome to our lesson on solving problems involving salaries, wages, benefits, and deductions. Every employee works in order to earn income. However, understanding how earnings are computed is equally important because the amount employees expect to receive is not always the same as the amount they actually take home. In today's lesson, we will learn how gross income, benefits, deductions, and net income are computed. These concepts are important because they help us understand payroll systems and verify whether our earnings are correctly computed. By the end of this lesson, you will realize that mathematics is not only useful inside the classroom. It is also an important tool in understanding real-life financial situations, especially those involving work and income. Let us begin. Let us begin with a simple question. Why is your take-home pay lower than your salary? Imagine that you have just started your first job. You are excited because your employment contract states that your monthly salary is 25,000 pesos. However, when you receive your first paycheck, you discover that the amount you actually received is lower than expected. Why did this happen? Where did the missing amount go? How can you determine whether your employer computed your salary correctly? Today, we will answer these questions by learning about benefits, deductions, gross income, and net income. As we go through today's lesson, keep this essential question in mind: can mathematics help us verify our earnings? By the end of the lesson, you should be able to answer this question confidently. Before we proceed, let us examine our learning objectives. At the end of this lesson, you should be able to define gross income and net income. You should also be able to identify employee benefits and deductions. Finally, you should be able to compute payroll-related earnings accurately. Keep these objectives in mind because they will guide our discussion throughout today's lesson. As we move from one topic to another, ask yourself whether you are already achieving these objectives. Let us begin with the concept of gross income. Gross income refers to the total earnings received by an employee before any deductions are made. In other words, gross income represents the employee's complete earnings before taxes, government contributions, and other deductions are subtracted. Gross income may include several components such as salary, overtime pay, allowances, commissions, and other benefits. It is important to understand gross income because it serves as the basis for many payroll computations. Before deductions are made, employers first determine the employee's gross income. As future employees, understanding this concept will help you verify whether your earnings are correctly computed. Gross income is composed of different types of earnings. These components may include salary, overtime pay, allowances, commissions, and benefits. Salary refers to the regular amount paid to employees for their services. Overtime pay is additional compensation received for work performed beyond regular working hours. Allowances are extra amounts provided by employers to help employees cover work-related expenses. Commission refers to earnings based on sales or performance. Benefits are additional forms of compensation given by employers. The combination of these earnings determines an employee's gross income. Let us now apply what we have learned about gross income. Consider an employee who receives a monthly salary of 20,000 pesos. In addition to the salary, the employee also receives allowances amounting to 1,500 pesos and overtime pay amounting to 1,500 pesos. To determine the gross income, we simply add all earnings received by the employee. Let us identify the given information. The salary is 20,000 pesos. The allowances amount to 1,500 pesos. The overtime pay is also 1,500 pesos. Now, let us add all these amounts together. 20,000 pesos plus 1,500 pesos plus 1,500 pesos equals 23,000 pesos. Therefore, the employee's gross income is 23,000 pesos. Always remember that gross income includes all earnings before deductions are subtracted. Aside from salary, employees may also receive additional compensation known as benefits. Benefits are extra amounts or privileges provided by employers in addition to regular salary. Examples include transportation allowance, meal allowance, communication allowance, rice subsidy, and clothing or uniform allowance. Transportation allowance helps employees pay for daily commuting expenses. Meal allowance assists employees in paying for food during working hours. Communication allowance helps cover expenses related to mobile phone or internet use for work purposes. Rice subsidy and clothing allowance are also commonly provided by employers in the Philippines. These benefits help improve employee welfare and increase the total value of the compensation package. Employers may provide other benefits in addition to allowances. Examples include health insurance or HMO coverage, 13th month pay, productivity bonuses, performance incentives, and leave benefits such as vacation leave and sick leave. Health insurance helps employees pay for medical expenses and hospitalization. The 13th month pay is a mandatory benefit provided to employees in the Philippines, usually received before the Christmas season. Productivity bonuses and performance incentives reward employees for excellent work performance. Leave benefits allow employees to take time off from work while still receiving compensation under certain conditions. These benefits provide financial security and improve the overall quality of work life. Let us examine a practical example. Maria works in a private company and receives a monthly salary of 20,000 pesos. Aside from her salary, she also receives a transportation allowance of 1,000 pesos, a meal allowance of 500 pesos, and a rice subsidy of 1,000 pesos. Although Maria's basic salary is only 20,000 pesos, these additional benefits increase the value of her overall compensation package. This example demonstrates that employees should not focus only on salary when evaluating job opportunities. Benefits also have value because they help employees reduce personal expenses and improve their financial well-being. Therefore, when comparing job offers, always consider both salary and benefits. Deductions are amounts subtracted from an employee's gross income before receiving the final take-home pay or net income. Some deductions are mandatory because they are required by law, while others may be voluntary or authorized by the employee. Since deductions reduce take-home pay, employees should understand how these amounts are computed. Employees should always review their payslips carefully to ensure that all deductions are correct and properly recorded. In the Philippines, several payroll deductions are commonly deducted from employee salaries. For private employees, contributions to the Social Security System or SSS provide benefits related to sickness, maternity, disability, retirement, and death. Government employees contribute to GSAS, which provides similar benefits. PhilHealth contributions help cover healthcare and hospitalization expenses. Pag-ibig contributions support savings programs and housing loan assistance. Finally, withholding tax is deducted and remitted to the government. Although these deductions reduce take-home pay, they provide important benefits and social protection. Let us compute total deductions. Suppose an employee has the following deductions: 1,000 pesos for SSS, 500 pesos for PhilHealth, 200 pesos for Pag-ibig, and 800 pesos for withholding tax. To determine total deductions, we simply add all deduction amounts. 1,000 pesos plus 500 pesos plus 200 pesos plus 800 pesos equals 2,500 pesos. Therefore, the employee's total deductions amount to 2,500 pesos. Always organize deduction amounts carefully to avoid errors in payroll computations. Remember that the greater the deductions, the lower the employee's net income or take-home pay. After computing total deductions, we can now determine net income. Net income refers to the actual amount received by the employee after all deductions have been subtracted from gross income. Net income is often called take-home pay because it represents the amount employees actually receive and can spend. To determine net income, we use the formula. Net income equals gross income minus total deductions. Let us apply this formula. Suppose an employee has a gross income of 25,000 pesos and total deductions amounting to 2,500 pesos. To determine net income, subtract total deductions from gross income. 25,000 pesos minus 2,500 pesos equals 22,500 pesos. Therefore, the employee's net income is 22,500 pesos. Notice that although the employee earned 25,000 pesos, the actual amount received was only 22,500 pesos because deductions were subtracted before payment was released. This example clearly illustrates the difference between gross income and net income. As future employees, understanding net income is important because it helps us estimate how much money we can actually use for savings, expenses, and other financial needs. Congratulations on completing today's lesson. Today, we learned about gross income, employee benefits, payroll deductions, and net income. Keep practicing these computations and continue applying mathematics to real-life situations. Thank you, and see you in our next lesson.